Alright everybody, Stacks by the Numbers, welcome back. And I wanted to do a quick video here, not necessarily talking really much about an update to DraftKings, even though some news came out after hours here with Flutter, who owns FanDuel. But more importantly, I wanted to speak quickly about just discipline and securing profits where you have them, right? So I mentioned multiple times here that right now I'm, cash poor at the moment. So when I do have a couple of bucks to kind of move over into my account, mostly from the YouTube ad money, I kind of disclose to pretty much everybody in videos and in the Discord. Again, Discord free for you guys to join. But I pretty much disclose, if I'm trying to, scalp an option real quick, or if I bought a handful of shares of whatever, ABC stock or whatever it might be. I always try to be very transparent with everybody. But I wanted to speak about DraftKings because I came in late today. It was, yeah, maybe like around here, I want to say, maybe like a quarter to two, 10 to 2, kind of like in this range. And if we back up, we can see, well, that's too far actually. Maybe like on the 1 month, I believe it was. Yeah, so we can see that, see the big spike up here to start the day, and then we began channeling down, consolidating. It looked like, in my opinion, we had, hold on. Oh, there you go. Let me turn that off. But it looked like, in my opinion, this looked like a potential bull flag. And I mentioned it both in the Discord and also on X. If you guys want, you can follow me on X as well. I try to, tweet stuff out as I see it. But as you see now, DraftKings, after being down so much, is now basically break even. But the point of the story was I saw the bull flag, right? And we're talking about seeing the trade, being disciplined, and securing profits. So as you see, I turned out correct, and DraftKings ended up running up, as you see, top left of the screen, hit a high of 31.60. I stepped in for so yeah, it was right around here. I stepped in for a 31.50 call for this Friday. So as you see, it started running up, I paid like 60 and change for the option. And here at this point, I think it was worth like 97 or something like that, right? So I was up about 50%, and I was going to stay disciplined and secure the trade. And even though it looked like you could potentially make the argument of maybe a rising wedge and it was going to pull back, you can see I also personally drew out my support trend line for the day, and you can see that it had kind of like that flash test, and then it bounced off, and then it had another like flash break of the support, and then it started climbing here, right, going into the close. And when I saw it bounce and going up after and continue to rise into the close, I told myself that realistically, I believe in the stock and it probably is going to go higher, but I'm up whatever it was, like 35, 40% at the time going into the close. So I said, to myself, should stay disciplined, should secure profits, should lock it in, make a couple of bucks. And of course, it's all hindsight, but as you see, we took a dip after hours. But more importantly, I said to myself, you know what? I could always, give it a day or two, and if it does happen to run up or it just kind of stays flat and I still like it, it still looks good in the technicals, maybe I can step in, I could rebuy a call for, potentially maybe next Friday, and I can catch another little bump. And the point of the story is, again, this is why we secure profits, right? So it's not necessarily I made a few bucks, look at how awesome I am. But more importantly, we had the news come out here from FanDuel owner Flutter, and as you see, they lifted guidance. But more importantly, they said they have no plans at this stage to follow DraftKings' strategy in adding a surcharge to customers' winnings in high tax U.S. states. Now, if you recall, the tax got raised in Illinois, I believe it was, when we spoke about it. And then you heard about the surcharge, and you had analysts from, I believe it was Morgan today, yeah, Morgan Stanley, they're basically saying that, yeah, it could be a little punch to profits in the short term, the increase in the tax, but they added the surcharge, so they're potentially going to kind of offset each other. But they basically feel that discrete items in 2024 will likely prove to be temporary headwinds to profitability, setting the stage for greater flow through in the year ahead, right? So they're still overweight. They lowered the price target a little bit from 51 to about 47, but that's actually one of the lower price targets that I've seen on DraftKings. And we still have a lot of analysts that are keeping their price targets up at 50 plus, and I've seen some even at 60. So everyone seems to be pretty bullish on DraftKings for the most part. And in my opinion, it's basically because they're seeing the growth that's coming in over the years, the growth in revenue, and of course, the slow turn towards profitability, which should fuel further growth and further stock price, obviously. But that news came out, and you can see that DraftKings immediately dropped down. Stock was down about 6.5% to sub 29.5, and you can see that it started to rebound now. It's basically break even from where it was, almost going into the close. But the point of the story is you never know what can happen, right? And of course, initially the stock started going up. So I knew that something came out. I was awaiting to see the news, and it turned out to start to drop. And then I saw the article, and we can see that obviously it could be technically, quote unquote, technically viewed as an immediate negative for DraftKings. So I guess I understand why they brought it down. 6.5% I don't agree with, which is probably why, in my opinion, they kind of immediately rebounded it. But the point of the story is, again, you never know what news is going to hit. You never know what's going to happen after hours. You never know what an earnings report is going to say. Look at, we recently spoke about Starbucks. People were mentioning it in the Discord today. It was up big. We were recently talking about Starbucks. The earnings came in light, right? I said, in my opinion, kind of that whole narrative, you go woke, you go broke. Stock continued to slip. It fell down into the low 70s. And then what happened? All of a sudden, they come out today, basically right after we looked at it, talking about this woke stuff, and then they come out and they say, "Oh yeah, the CEO's too woke for us, and now we're gonna replace him." So now all of a sudden, that narrative that we had just a couple of weeks ago could now potentially be off the table, right? And now we might have a stock where even if the public and a boycott might have brought it down back into the 70s, we might have a stock that could be held up here maybe potentially 80, 90, $100+ now over the next several months and just kind of ride the wave off of this positive catalyst, right? So again, I understand it's all hindsight, and I happen to look like a financial genius just because this news hit and the stock ended up tanking down. But again, something could have come out after hours, and it could have easily ran the stock up, right? And of course, people would have said, "Oh, you sold right before the news, you're a fool." But again, we don't know what's coming. And the point is, again, I basically secured like a nice 35-40% quick little scalp, took about 2 hours, got out right before the close, and then these the FanDuel parent company comes out, Flutter, and they announced that, again, they're not implementing a surcharge like DraftKings is, and you can see that we initially dropped down, and now we're basically back up. But I said, in my opinion also, as it was going down, that I felt that this personally, in my eyes, was an overreaction. And I said that if at the open DraftKings was down here sub 30, I'd watch it for maybe like 10-20 minutes, and then I'd potentially step in and buy a call, because this rebound was probably inevitable. And you can see the stock kind of still slowly ticking higher. Now it's back up to 31.25. It's down, as you see, about 0.5% after hours. Was down 6.5% here at this point on this news. So again, basically the main rule is to stay disciplined. And in my opinion, for all of you smaller term traders out there, don't get too caught up on social media, because people will always post, "Oh, look at what this stock did today." And then all of a sudden you're on the hunt for similar stocks, hoping and praying that you see the same move with your investment. People will post, that they got blessed. So I'm sure someone randomly bought Starbucks calls, maybe in general, because they saw that the RSI was heading down, and they might have felt it was an overreaction, right? And they're looking at the stock saying, "Oh, you know what? It's down at 73, 72. It can easily come back up to like 78, 80. So I'm going to buy some calls maybe a couple of weeks out." And then what happens? You wake up, you have the news. Oh yeah, all of a sudden we're replacing a board member. Boom, stock spikes all the way back up to 92, 93, wherever the hell it went today. Right? So that person will probably post their gains somewhere like, "Holy crap, I just made, 10,000% on a Starbucks call." And then what happens? Then you get upset because you're not seeing those returns. You start to, talk to yourself in your own mind. "Oh, who the hell is this person? They're making 10,000%. I'm struggling to secure 30% profits. What the heck's going on?" Right? So then you begin to change your strategy, and it's almost like revenge trading, but not necessarily because you lost money. It's because you missed out on a trade, right? So this is why, again, I'm saying I like to make a watch list. I like to look for stocks to sell off or get a little overextended. And then, in my opinion, you can step in on some puts and wait for a sell off or something like a DraftKings here. Again, I saw the bull flag. I saw it was on the up and up. Markets were up nice. So I said, you know what? It's here in the low 31s. You could probably buy a 31.50 and make a couple of bucks even before the end of the day if you wanted to be quick with it. And like I said, the stock went from the call went from like the mid 60s up to like the mid high 90s, right? So boom, in, out, secure a quick 40-50% profit, and you're on to the next one, right? So even if this was the only thing you did today, you made yourself a quick whatever, 30, 40, 50%. That's the point I'm trying to make. And again, going back to you smaller account people, this is why I say, in my opinion, the number one priority should be securing profits, steadily increasing the buying power, and then hypothetically, if you're able to do that consistently, and of course, not take silly trades, not make if you have $1,000 account and you make a quick 200-300, you don't start just tossing it into earnings plays to try to make a quick return, right? You understand what I'm saying? Now, I appreciate the fact you could make good returns off of earnings, but we know that earnings are a gamble. And even a company as decent as DraftKings, in my opinion, which has been growing revenue nicely, they posted a decent earnings report, but they technically came in light on revenue. And what happened? They started to beat up the stock. It started to trend down, give back a lot of those gains that it recently took, that it recently had. And that's why I say smaller accounts, look for those base hits, quick 20, 30, 40%. Because again, the average advisor on Wall Street for investments probably showing their clients, 10, 15, 18% for the year if they have a really good year. Think about that. So if you can see a trade setting up and all of a sudden you're up 30, 40% real quick, that is much more phenomenal than you might think it is. And that's why I say, in my eyes, try not to spend too much time on social media looking at other phenomenal blessed trades that other people caught, because you're going to go out of your mind and you're going to start to push the discipline to the side, and then all of a sudden you're trying to do an earnings play, or you're going to step into this stock that's been, basically getting taken to the crapper over the last 7 months, and you're just like hoping and praying that an announcement is made and the stock explodes 300%. Again, we know it can happen, but depending on how much you have and how much risk you should technically be taking, that may not be the strategy for you. And if you have $1,000 account and you keep hitting these base hits like this, and all of a sudden you turn around, wow, you got 1,600, you got 1,800 now in your account. In my opinion, what should you do? You should now take 30, 40, even 50% of that capital and start to roll it into longer term investments. Maybe you actually buy shares of a stock you like instead of playing options on it. Maybe you roll it into a mutual fund or a bond fund, an income fund. Maybe you take, now you went from 1,000 to 1,800. So now you take 700, 800. Wow, Steam friends, my apologies. I always forget. So now you take maybe, a 6, 7, 800, and you roll it into shares or an income fund, and you keep 2, 300 in cash now moving forward, right? You're not looking to invest the full 1,000 because now you're over 1,000, and now with the leftover whatever 600, 700, if you want, you can continue to look for your steady base hits, right? Now you build that 6, 700 back up to like 1,500. Now, in my opinion, you do the same thing, right? You take 500, you roll it into longer term investments, your income funds, roll it into shares of cheaper, longer term growth stocks. You take another 100 or 200, push it into the cash pile. Then whatever's left, you look to continue to slowly build that up off of more base hits off of the trades. You understand? In my opinion, that is the way to do it. And if you can really limit your losses, stay disciplined, not take silly trades, you can potentially turn around. All of a sudden, you have like a $7,000 account. And half of that is in actual shares, or they're in units in a fund. You have, almost 1,000 sitting in cash that you just hold for a rainy day in case something happens. And then you have another, 2K that you're looking to play in the shorter term. You understand what I'm saying? In my opinion, that's how you should do it. And that's why even me, Again, I've burned through many accounts. I will admit to it because, again, I'm not looking for sympathy or anything like that. I know we all have different life stories, but I've had multiple setbacks throughout my life, and I was consistently, it seemed like, being set back to zero. So I was always out there. I would start with the base hits, like I just, told you, in my opinion, the right strategy. I would start with the base hits, and then once it started rolling, that's when I'd go too heavy. That's when I'd go all in and I wouldn't have cash on hand. And then any small thing that happened would completely screw up everything. And I'd essentially almost be back to square one. You understand what I'm saying? So this is why, again, I mentioned that I made this channel. Because investments and trading are two different things. We know that. And we know that when you're starting out small with a couple of $100, with a couple of $1,000, you're looking for those home runs because you want to immediately get to 20K, 50K, 200,000. You want to immediately chunk up and hit those milestones. And I'm telling you from previous experience, if I did what I told you, kind of, right? If I actually did what I told you, and also, again, had a little bit of a different setup here throughout my life, and I was able to take different opportunities and have more steady income coming in over the last, 10, 12, 15 years, I should technically, at minimum, in my opinion, have a six-figure fallback right now. I should have at least low six figures on the low end after all these years with all the knowledge that I've accumulated. But the problem is I don't technically really have much to show for it. And that is because, again, it goes back to staying disciplined, implementing the right strategy, not overextending yourself, not trying to get ahead of the market, not trying to outsmart the market. So stay on your path, stay disciplined. And that's why I say in this market, even though we're up, we see the swings, several hundred points. All of a sudden we're up, all of a sudden we're down. Who made an announcement? What data came out, and all of a sudden the market doesn't like it and we start tanking. So these little sayings like, oh, stocks only go up, again, that you all started implementing that just over the last couple of years. Anyone who's been in investments for longer than the last 3-4 years knows that's a fallacy. So that's what I mean. Don't get sucked into kind of like this new age nonsense, in my opinion. There's a reason why practically every like trader on YouTube and anyone who like has a following or tries to sell you a course, there's a reason why probably most of them all are saying what I'm saying right now. The fact that you should develop a strategy, you should stay disciplined, try not to, stray off the path, secure profits where you can, stay sharp, right? You have to stay on top of it. So, some people may have more wealth than I do, but at the end of the day, the knowledge, the advice, I guess you can take it as, if you want to call it advice, it's more like information, really. But, you have to implement this correctly. And I'm telling you, based off my previous experiences, like I said, where I've come from, I should have much more than I have right now. So that's why when I hear about you guys in the comments, or you guys come in the Discord and you took a position and it's completely gone and you have no cash left and you can't take advantage of the next position, this is why I'm making this video. This is not necessarily, oh, this guy made more money than you have no money. That's not what this is about. Whether those comments come now on the video or not, I honestly could care less. I am bulletproof. But more importantly, it's learning from my mistakes and now implementing the correct strategy, the correct discipline moving forward. And on the technical side, just quickly, if we look at stock charts, before I let you go, DraftKings, in my eyes, had this run up today because, yes, they were beating it down. Yes, it could have been viewed as an overreaction. We were also dropping down channeling. You can see maybe potentially forming this little descending wedge over the last couple of days. But also you can see traders, excuse me, traders like to look at the RSI, right? And you can see the RSI came down to 30, sub 30 for a handful of days. The stock was bouncing around, it was staying down, and that's why we had a nice pop today, nice 5% pop, coming off of the bottom and the consolidation and the low RSI, and boom, now we have a pop today. And in my opinion, we could probably come back up to this mid Bollinger Band, but now with this news coming out with FanDuel, they may potentially keep it down or flat for a couple of days and maybe stall out this week's options, in my opinion. And then potentially next week, you can start to see the run up back up to 34, 35 and kind of come up and try to see this trend line coming down across the tops here, you know, kind of try to meet up with that resistance trend line. And then we take it from there if we either break or reject. In my opinion, that's what may happen now. And you can see the RSI here on the weekly as well. Looked like it was down to like the low 30s. And then boom, we have a nice pop today up to about 39. RSI closed on the weekly. You can see we broke down, began to trumpet on the Bollinger Bands. And you can see we broke down below the bottom Bollinger Band. And now boom, we have a nice spike back up. And almost could have almost a bull hammer, but not quite, of course. As you see, the high again, 31.59. Stock closed 31.44 there. But you can see the MACD was steadily slipping down and selling off for several months. The stock was kind of in this downtrend, right? We had these little spikes, these little reclimbs, retests, but we ended up breaking the 50-day moving average. And then even though revenue was growing, it technically missed by a handful of bucks. So they dropped it down to sub 30, and now it's potentially coming back. So we may see like this 200-day moving average here, maybe 33.29 over the next couple of days after Wall Street digests this news, if they feel it's not a big deal. And you could see maybe like 33 and change there, and then they might reject it again. We don't know. You know, again, this is why you have to constantly look at a stock and update yourself and see what's going on. But you know, they initially beat it up on that FanDuel news, and it looks like it basically completely rebounded. So the stock may open up and only be down again like 0.5%, 1% tomorrow. And then what's tomorrow? Wednesday, right? Yeah. So, and then maybe Thursday it'll be up, you know, 1 or 2%, and it'll try to climb back up to the high 31s, you know, maybe 32 where it was trying to get to, right? So this is why you have to take it day by day. And again, any news can come out during the day, after hours, pre-market. And that's why if you jump in a situation and you say to yourself, I really need to be right, I really need to make money. Well, then guess what? When you are right, and you know, if you buy a call and the stock goes up and all of a sudden you're up, guess what? You have to lock it in. It is not real until you lock it in. And now if this rebound didn't happen, and let's say here at 31 and a quarter, you bought 33 calls for this Friday, and if the rebound didn't happen, now you wake up tomorrow, the stock's at 29.40. So now what? Now the option that you just spent 40, 50 bucks on is worth $8, right? And whether you're technically correct in theory, you're going to wake up to a big loss, and you're either going to take that big loss or potentially try to get blessed over the next couple of days, or more than likely, you're going to go down with the ship and end up having it expire worthless. So this is why, again, I say, this isn't necessarily, oh, I nailed the call, I'm a genius, right? Oh, I have no money, I'm a loser. I really do not care what anyone's opinion is about my situation. The main driving point of this video and of my channel is for you to learn from me, learn from previous mistakes, and implement it more intelligently moving forward in your own personal strategy. But that's pretty much it. I'm going to end it there because I'm hungry. I want to eat dinner. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.